Tensions exploded in the Middle East this weekend after Trump confirmed U.S. airstrikes on 3 Iranian nuclear sites. The news nuked crypto markets. Bitcoin dropped below 101K within minutes, and nearly $40 billion in value vanished from the space in just 3 hours.
Welcome back to the weekly Bitcoin.com's no BS recap of what actually mattered in crypto. I'm Graham Stone here with David Sensel, and this week we're looking at how a real-world flashpoint could reshape the financial system. The US bombed Iran, crypto markets panicked, and now Goldman is warning about a $150 oil price. We'll unpack what it all means for Bitcoin, inflation, and mining. Plus, Trump's tariffs are already rewriting Bitcoin's supply chain. Russia is making a serious play for mining dominance, and Circle's IPO just turned Wall Street upside down. Quick plug before we dive in. David's weekly newsletter is the best 5-minute read in crypto. Totally free at bitcoin.com/newsletters. Do yourself a favor and go subscribe right now. All right, let's get into it.
All right. Iran, Israel, plus now the USA. Tensions exploded in the Middle East this weekend after Trump confirmed U.S. airstrikes on 3 Iranian nuclear sites, Fordow, Natanz, and Esfahan. The news nuked crypto markets. Bitcoin dropped below 101K within minutes, and nearly $40 billion in value vanished from the space in just 3 hours. The sell-off deepened on Sunday as Iran's parliament moved to shut down the Strait of Hormuz. They said that it's possible to do it. They don't have the ability to do it themselves. The Strait of Hormuz, of course, is a critical artery for global oil and could have major effects in Europe and Asia. Bitcoin dipped below 100K for the first time in over 6 weeks, dragging down alts. Total market cap shed 90 billion, and long position liquidations topped 877 million, including 161 million in BTC longs alone. I think the long to short ratio is now 1-3. Everyone's heavily shorting the market at this moment. Pretty wild stuff, Graham.
Absolutely. The price of Bitcoin, obviously dipped below 100K, seems to have rebounded here above almost the 101K right now. So Bitcoin doing what it has done in previous geopolitical uncertainty events, which is sell off quickly, rebound quickly. Meanwhile, Goldman Sachs analysts are warning that oil could spike to $150 if Iran shuts down the Strait of Hormuz. The Strait of Hormuz, of course, is a critical checkpoint for oil transportation, with nearly 20% of global oil and gas going through the strait. Current oil prices already include an approximate $10 geopolitical premium, and escalation paths range from no action to full closure, with a 34% chance priced in over the weekend. U.S. officials call the move to close the Strait of Hormuz suicidal, and markets are bracing for fallout. What will happen if oil actually does hit $150? If the Strait of Hormuz actually does get shut down and oil spikes, what will happen to Bitcoin in that scenario?
I think you can start by separating out the short-term versus the medium-term effects of this. I think in the short term, the Strait closing and oil spiking that high, I doubt it'll hit 150. That seems pretty insane to me. But let's say it breaks above 100, which is already ridiculous. I think that would cause major repercussions in the real economy, and risk assets would probably price for such, which would cause them to drop precipitously, and I would think Bitcoin would follow that, if not go before that. And then for the medium term, I don't think high oil prices have a material effect on Bitcoin's price. So I'd imagine Bitcoin would recover pretty quickly, probably ahead of equities, I'd imagine. What do you think?
Yeah, doing the thing that Bitcoin normally does, which is drop first, recover first.
I do think that equities could stay down though with oil that high, just because presumably equities are pricing like a pricing mechanism for things that happen in the real economy, and people's appetite for buying things and services would fall with oil that high. So I think it would have more of a material effect on equities than it would on the price of Bitcoin.
Yeah, and if oil prices spike, how does that affect the chance of a rate cut in the U.S.?
Pretty high. I've seen some analysts that I follow talk about this, and this would likely be a scenario where Powell would use one of his few remaining bullets. The question is the timing of it, though, and some of the initial thoughts that I've read from others is that, in Trump's words, Powell would probably likely be slow to this, as in oil would spike, there would be tremors to the economy, equities would fall, and then Powell slowly, probably, would have a rate cut or two. And so you'd see this delay from the effects, the initial effects, and Powell's actions.
I think there's also something to consider here with regards to mining, with oil potentially getting cut off from the Strait of Hormuz and the price of oil spiking. It may result in higher energy costs for Bitcoin miners in the short term, potentially shifting the mining industry.
Yeah.
You may see more mining in regions where oil is kind of like locked up, like in the Gulf. They have no way to get it out rather than just like burn it. They're going to use that energy to mine more Bitcoin. So you might see some kind of shift there.
I think I saw, again, initial posts just from this morning. This is morning in Asia, so I'm just trying to get up to speed with all the crazy world events happening. But I think it was Max Resnick. He was commenting on some data that just came out, which is immediately after the U.S. bombing. I think it's the global hash rate for Bitcoin fell and left many people scratching their heads. It seems like a pretty big coincidence. And so the question is, was Iran or some players in the Middle East, were they mining Bitcoin a lot? And then once this kind of physical escalation started, they pulled back, and it had a material effect on the global hash rate. Maybe this is just a spurious causality, so it has nothing to do with anything. But it'll be pretty interesting to see if this data actually has some kind of connection with geopolitical events. As in, you can watch the hash rate of Bitcoin and be able to tell some things about geopolitics, which is pretty wild.
Yeah, it's pretty wild. Let's skip ahead here to Trump's tariffs and how they're reshaping the Bitcoin mining industries. As a result of the tariffs, China's top three Bitcoin mining rig manufacturers, Bitmain, Canaan, and MicroBT, are relocating production to the U.S. This, of course, allows them to sidestep Trump's tariffs on Chinese imports. And together, these three rig manufacturers produce over 90% of the global Bitcoin mining rigs. So obviously, this vindicates to some extent one aspect of Trump's tariffs policy, which is that manufacturing will shift to the U.S. Perhaps more importantly, I think, as you're saying, David, it's interesting to see how Bitcoin mining is becoming kind of a geopolitical chess piece.
Speaking of, yeah, meanwhile, an analyst is predicting Russia will emerge as the second biggest Bitcoin mining nation after the U.S. Pretty surprising news to me. I mean, I feel like China has really ceded ground in this over the past, 5-6 years. So GIS Mining CEO Vasily Gira, sounds Russian, says Russia is on track to become the world's second largest Bitcoin mining power within 3 years. It's a long time. Despite current energy restrictions, he sees rapid growth ahead thanks to new institutional entrants and pending crypto legislation, namely the forthcoming legislation of Bitcoin trading and the rise of self-powered mining facilities. Here we have a nation that is, a generous way of saying, is competing with the U.S., and now they are going to be competing on Bitcoin mining as well. Big moves. You also have, I would say, China in this mix as well. But they, again, like I said, have ceded so much ground between the U.S., Russia, and China. And then, as mentioned earlier, the Middle East is becoming much more serious about Bitcoin mining. Graham, we were in Abu Dhabi last year for Bitcoin MENA, and every local I talked to, they all said that they were serious about mining, and the government was serious about mining. So
it is fascinating that, just this whole idea that with the way energy is produced, the way you have the energy resources, oil produced in certain regions, and these certain regions are being like sanctioned by the US, but what they're doing is they're just like taking that excess energy that they wouldn't otherwise be able to supply to, let's say, Europe or their enemy nations, and they're using that to mine Bitcoin. So Bitcoin mining seems to be becoming a political chess piece, a geopolitical chess piece.
There are a couple interesting points here, though, too, because number one, you have the government's relationship with mining. This has hurt China a lot, obviously. You have the cost of energy that benefits countries like Russia and the Middle East, but also America. We have a surplus of energy too. Then you have, as the first story mentioned, the hardware itself. And I think this is where like the Middle East is maybe hurt the most. It's got to be a bottleneck for the Middle East, is just getting these rigs in enough sufficient quantity to actually use. And the number of like leading manufacturers of this equipment is very small, right? And so even if you have a government that's accepting of Bitcoin mining and you have cheap resources, you still could be stymied by the fact that you don't have access to the machines. Itself.
And so that makes it especially interesting that the top three rig manufacturers are moving to the US. That potentially provides some leverage for the United States to prevent competing nations from getting their hands on these rigs.
Definitely. I wonder what the talk in China amongst the leadership is about this, or if they even care. Because if all these other nations are kind of taking this more seriously, I just wonder if the leadership is looking at where their position used to be, right? They used to be, in 2017, that's what everyone talked about, was Bitcoin mining was in China, basically. That was it.
Yeah.
And now they seem to have dropped to third, fourth. I don't know where they are.
Meanwhile, China is one of the biggest buyers of gold, which it's similar to Bitcoin in terms of its utility as a not the US dollar asset, right? And so you could argue that this is a pretty big own goal from China. They could have accumulated much more Bitcoin. Instead, they went the gold route, it seems.
Well, so there's another issue with this. I would say maybe the biggest difference between gold and Bitcoin. Well, okay, there are a couple, but one of the biggest differences between gold and Bitcoin is not physically limited like gold is. And the Chinese government is concerned about its citizens taking money out of their closed capital system.
Yeah.
And it's much harder for the wealthy Chinese to buy gold and then get it out of the country, right?
Yeah.
Because it's a physical giant thing, easy to track. But man, if you're a wealthy Chinese person, you could put hundreds of millions of dollars worth of Bitcoin in your pocket and get it out of the country. And then, so I think that's probably one of the bigger reasons why China doesn't really like Bitcoin is they've been fighting pretty hard against this for a while.
Absolutely. Let's look at this Coinbase sponsoring of the U.S. Army and how it is drawing the ire of the crypto community, perhaps.
Yeah, okay. So this is kind of tied in with the headline story of conflict in the Middle East, but it's also kind of funny. Last week, Coinbase, which is the largest U.S. crypto exchange, kind of the darling of the industry, of the crypto industry. It's one of our, I would say, best crypto companies.
Biggest success story for sure.
Yeah, but also like a great reputation. This all these kinds of things. They don't carry some of the baggage that other big crypto companies have. For example, Binance. In any case, they maybe had a misstep last week when they decided to sponsor the 250th birthday of the U.S. Army Grand Military Parade. And so you had this event which took place in Arlington and Washington D.C. and soldiers and military equipment walking by, brought to you by Coinbase. And so it left many in the crypto community, including myself, kind of scratching our heads, thinking like, what's up with this? I feel like it's a weird look for a crypto company to be sponsoring the military wing of a government. And I just felt like it was kind of at odds with crypto ethos, at least the original crypto ethos.
Yeah, absolutely. It does seem rather dirty. And then we, of course, have this troll post. Somebody slapped a Coinbase logo on a stealth bomber. Just
B-2 bombers.
How dark this is.
Bunker busters, brought to you by Coinbase. What is Coinbase's tagline? I'm sure it's something like
Economic
crypto freedom. Yeah, something
freedom,
like that. Yeah. Military brought to you by economic freedom, right?
Yeah.
Peace through war. So yeah. Anyway, it's an interesting thing. I think this, not to read too deeply into this, Graham, but this does, I think, in a kind of humorous way, encapsulate some of the fears that people have about where the industry is going. How it's incredibly mainstream. How it might be being co-opted by the powers that be, which is, Bitcoin was specifically released to kind of check against those powers. So weird.
Yeah. All right. Let's switch gears here for our last story of the week and talk about the Circle IPO. Circle stock CRCL has obviously erupted since its New York Stock Exchange debut on June 5th. It's up 674% in 10 trading days, starting at $31 per share, and it's now valued at over $3.4 billion. Despite Circle only raised $446 million in the IPO. So this hype marks Wall Street's first major embrace of a stablecoin native company. Now, we had an interesting take on this whole Circle IPO from billionaire venture capitalist Chamath, and he said he slammed the IPO as a $3 billion giveaway to banks' favorite clients. And he argued that the stock was grossly mispriced. And then he used that as a way to praise the idea of SPACs.
Special purpose acquisition companies.
Purpose acquisition companies. So he used this to praise the idea of SPACs and direct listings, which Coinbase, by the way, was a direct listing. And he's saying that way of going to market, getting to the public markets, is actually more transparent and equitable. That's his argument. And so he's also saying that basically the people at Circle, the employees, the founders, are kind of getting ripped off here, and a large amount of the money that was made in this raise actually just goes to like random people, especially like the insiders of the banks who went on their roadshow to bring it to the IPO.
Important thing to note here is Chamath is pretty famous for making a lot of his money on SPACs and the COVID helicopter money era. And I think a majority of his SPACs went down 70 to 80% from their listings. So a lot of people not happy with Chamath from his SPAC shenanigans back then. And so for him to then come out and say SPACs would have solved this is a bit of I think a troll.
It's a bit rich.
It's but he does, I think, have a point though, which is, or at least something interesting to talk about, which is, did Circle, the company, leave a lot of money on the table by doing a proper IPO? Would it have been better for them to have gotten more money of that $3 billion, or is what they got enough? So again, it's I kind of understand what he's saying, right? Like for this to go up 600% in such a short time does seem to me like either the market's really frothy or it was grossly mispriced.
Yeah, well, I think it's a combination of both for sure, because it's pretty obvious that there is huge appetite for something in crypto relating to stablecoins, and there aren't that many options on the table right now. Circle is the most obvious option, and investors wanted exposure to that, and they're getting it through Circle.
Yeah.
One other point here, I think, which is, as we discussed on Token Narratives on Friday, this is sort of a more indication or vindication of the new narrative that TradFi is where the big gains are right now in crypto. Altcoins are down bad. They just keep getting hammered lower and lower. Meanwhile, you're seeing stocks like Circle pump 6-7x, and many other stocks that have like crypto treasury company stocks, Bitcoin treasury company stocks, all pumping like shitcoins basically, while the original shitcoins are just bleeding out day after day, week after week.
Yeah, I 100% agree. Now, this next story is kind of about what happens next, right? So Circle comes out, it does a 600% increase in like under a month. Obviously, this is going to bring about some copycats, right? People are going to want to follow this same narrative and run it into the ground. Arthur Hayes, the famous co-founder of BitMEX and prognosticator of the Bitcoin price, he has warned that the next wave of stablecoin listings will be quote-unquote Circle copycats, and they will not pump nearly as much as Circle has. He asserts that such copycats will never eclipse Circle, the number 2 stablecoin issuer, after Tether in revenue generation. That, to me, is to be TBD, right? He does warn this. He does make these warnings, though, with a bit of a compromise himself. His family office has investments in Athena, which is a stablecoin issuer rival to Circle, and it kind of makes sense for him to think that this Athena DeFi-ish way of doing things might be better than this corporate treasury TradFi, I don't know, Frankenstein thing will work.
So that's his angle.
Maybe, right? There's a couple things here, though. The first one is he's kind of saying something that I think I disagree with, which is these stablecoin issuers that come up after Circle will never do as much revenue generation as Circle, which means that Circle, he's basically saying that Circle has a moat that they're not going to be kind of chiseled away. Their market share is not going to be chiseled away. I mean, at least that's how I read that. I don't agree with that. I think that Circle is very vulnerable, as we've said before on this show and others, to the likes of traditional finance powerhouses like, I don't know, Merrill Lynch or Consortium, as you said last week, coming together to issue a stablecoin.
Yeah, it seems like it doesn't take much for whatever network effects USDC has right now to just be eroded by someone else who has better distribution, aka a bank. And because it's crypto, the switching fee costs are trivial. It's easy if you just move from Circle to some other stable coin. So I don't see a huge moat here for Circle. And then on top of that, as we know, Circle doesn't have nearly the revenue to profit ratio of Tether. So a large percentage of the revenue that Circle generates, they lose that to their operating costs, which are a combination of their really high salaries that they pay their people and the deals that they have with Coinbase and market makers and so on. So Circle is just not highly profitable, and the network effects are questionable. So yeah, I agree with your take that they are susceptible to disruption.
I do think his initial point probably is right, though. A copycat is just not going to, usually it doesn't get the same kind of boost the second time around, So Circle's done 600% in, was it 10 trading days?
10 trading days, yeah.
That's wild, man. That's wild. I think you'd have to not expect the next copycat, especially a low quality copycat, to do as well.
For sure. All right, David, anything else to add here before we wrap things up?
Nope. Just stay safe. Keep your eyes glued to the news feed. See what's happening in this Middle Eastern conflict. I know that's what I'm going to be doing.
Yeah, for sure. I'm going to be having my finger on the buy button if Bitcoin dips further, and definitely watching the geopolitical events unfold. All right, David, thanks for your time, and thanks for everyone for listening. See you guys next week on the weekly recap.